when I talk about tokenization, it's the tokenization of shares, which is the tokenization of security. There's other people out there that are trying to work with counties to actually put their county records on the blockchain, or the California Department of Vehicle Registration is registering vehicles on the blockchain. And that's what blockchain is really good at, because it shows where this asset.
Welcome everyone to the podcast. Today we're going to talk about blockchain real estate investing and are delighted to have as our guest Michael Flight. Michael's a real estate entrepreneur and blockchain real estate specialist. He also has an extensive record of value-add shopping center redevelopment and has been active in commercial real estate for over 35 years. Welcome, Michael.
How you doing, Robbie? Thanks for inviting me along today.
Great. Thank you. I appreciate you coming. And what you're going to offer our listeners is something very unique. And let's just get to it. What really is blockchain real estate investing, and what is tokenization of real estate?
Sure. Well, those are some really big words, and a lot of people get scared because they think that it has something to do with cryptocurrency, and they're like, I don't want to get involved with this crazy stuff, or is this one of those Bitcoin things? And I always explain to people, it's like, it is a regular syndication like you would do. So you guys are specialized in core plus, value add, multifamily. So, and when you go out and syndicate, you do paper shares of a syndication. And so with blockchain real estate, it's just basically taking it and making it a digital format so that those shares can actually now trade, and you can do other things. You get a flexibility with your shares versus if I invested with you, I might be in the situation that I have to like exit out after 3 years, but the deal to go full cycle is 5 years, maybe 7 years. So, you get some flexibility, but we can back up a little bit and explain, because a lot of people don't even know what blockchain is. And so yes, I like to explain blockchain as just like we're using the internet right now. And the internet is a communications tool that makes communicating anywhere in the world easy and simple to use. Blockchain is a method of sending money, value, or anything that you need. So for example, a share, you can send a share instantaneously worldwide. You can send money in the form of a digital currency instantaneous worldwide. So that's the value of blockchain, because blockchain is not only this ledger like a giant spreadsheet, but it's also keeps track in a time fashion. So if I sent you $10 yesterday, that's memorialized in the blockchain, and you can't go back and redo that. So it shows that I sent you, and it might be me sending it to you and somebody can see your name on it, or it might be me sending it to you and it's just a numerical address. Just like if I sent it to you, I'm here in Oak Brook, Illinois, and you sent me some money and it went to 1010 Jory Boulevard. So that's kind of what blockchain is. Blockchain really just shrinks the world and allows you to send either value or assets or money worldwide.
Okay, got it. And there's layers and layers of redundancy in blockchain, correct? So that's why you can't fabricate anything.
Yes, there is. So it really depends on it, but it's really set up so that right now, if I wanted to send money to you, I'd have to write a check. The check would have to go through the bank. The bank would have to send it through the system or the SWIFT system. They need to make sure that the money is actually in the account. Where with blockchain, I have to prove that I actually own the asset. Like, let's say I own $100,000 of one of your syndications, your multifamily syndications, and each one of those shares is $10,000. If I wanted to trade one of those shares, I would have to prove it that I actually own the shares. And then if we agreed on the fact that, okay, the shares are worth $10,000, you would have to put the money up. And so it would be instantaneous right there. You wouldn't have to necessarily go through a bank.
Interesting. Okay. Now, how does this translate to real estate?
Okay. So we're still on the syndication things. And as I said, right now, the syndication era is in a paper format.
Right.
And it's semi-digital. But this is basically like going from the record player, I was going to say Walkman, but go in,
That is an advance. That is an advance.
yeah, go into the iPhone. So it's like,
Yeah.
so you're going to be able to not only like invest in real estate on your phone, but you're going to be able to keep track of all your assets and all your money and everything on your phone, on your computer. So that's how it translates. Your shares are going to be digital shares. But what's really cool about those digital shares is that, number one, it's going to make it easier for sponsors to keep track of, and it's going to be easier to say, I've got this digital footprint that the payments were made, whether you're paying monthly, whether you're paying quarterly, all the rest of that stuff. But the other thing is that it's going to make it easier for investors to do estate planning. Because like I said, I've got my $100,000 of shares in one of your multifamily properties. What type of deal are you doing now? Give me a name of it.
Sure. Well, at the time of this recording, we have a deal called Park 33, which we just sent an email out to open up to our investors.
Okay, so I've invested in Park 33, and I invest $100,000 into that. If I invest with the tokens, I can do estate planning, and I can assign $30,000 of that to one of my sons, $30,000 to another son, and my wife and I can keep the $40,000. I can also, at some point in time, after a 1-year lockup period, those shares can trade to accredited or non-accredited investors. So it's a way that you could develop a relationship with non-accredited investors, that they can get used to your things and expand your investor network. But it also provides some liquidity. I never say that it's going to be like liquidity like the stock market, but it provides some liquidity for your investors that if they have to, they can sell their shares. But here's the really cool thing. There's things out there right now that if they get comfortable with the value of those shares, you could actually borrow against those shares, so you wouldn't have to sell them. But you do, like, for example, my son's getting married in August. And so I thought that I was going to avoid a bunch of expenses, because it's like, oh, well, the daughter, the woman is supposed to pay for the whole thing. But it turns out that you have to do a really fancy rehearsal dinner. So this rehearsal dinner is going to be like $10,000. I'm like, that's the same price as my wedding was. So if I need liquidity, I can actually borrow against those shares to free up some money. And so that's some of the investor benefits.
Okay, so take us through this process using an example that where you've done this before. You've used the blockchain, you've tokenized real estate. Can you just take us through step by step how this happened, starting with how the sponsor sent out the offering to the investors and how the investors took advantage of it?
Sure. And what I'm also going to do is back up once again, because real estate tokenization can mean several different things to different people. When I talk about tokenization, it's the tokenization of shares, which is the tokenization of security. There's other people out there that are trying to work with counties to actually put their county records on the blockchain, or the California Department of Vehicle Registration is registering vehicles on the blockchain. And that's what blockchain is really good at, because it shows where this asset is. So, but we're not talking about the tokenization of the physical real estate. What you and I are discussing today, and it's what I specialize in, is tokenizing the securities in the investments in real estate. You could do this in oil and gas. You can do it in a car wash, an ATM fund, anything like that. So anything that people are doing alternative assets, you could do that. And so the process is that what we did was we created Liberty Fund, and Liberty Fund is a triple net property fund. And we went and raised the money for that, and then issued those shares to a blockchain. So those shares are now tradable. It's the exact same paperwork that somebody would normally do investing in Park Place with you,
right?
Or Park 32.
Yeah.
Yeah. So it's the same thing as somebody investing in Park 33 with you,
right?
But they would get the option to either take their shares as paper shares or take their shares as digital shares. And with the digital shares, again, you get a lot more flexibility, because let's say.
So let me ask you this: do you have a third party vendor that the sponsor will partner with to transfer it to blockchain? How that works?
Yeah, you tokenize the shares.
Okay. So as far as the sponsor goes, as far as it look for us and our investors, we'd be raising the same way we're raising currently, but then the investors would have the option to digitize it or just do the standard LP investment that they typically do with us.
Exactly. And so what the what's different for the sponsor is the sponsor needs to make sure that his documents include the fact that these can be potentially tradable. And so there's some extra legal language in there. And one of
the PPM has to be adjusted.
The operating agreement and everything like that. So there's adjustments to that. Yes. So by doing that, and so one of the things that we did was we created a new company with a securities attorney. It's called Accelerated Law. And what we realized is that we had to backwards engineer how to issue these things to a blockchain. And at the same time, we had to backwards engineer how to make the legal work more efficient, especially legal securities work more efficient. So we created this tokenization platform because as of right now, if you just decide to go out and tokenize your shares, you would actually have to pay extra for that. Whereas we said, we can put this into the legal fees and actually save money on legal fees and have something that's tokenizable and we can issue it to a blockchain all at the same time. So we not only do the legal paperwork, which is the offering memorandum, the SIN agreement, and the LLC agreement, but we also create the smart contract that is the actual thing that connects those shares to a blockchain.
I see. Okay. All right. So the sponsor pays the legal fees. Is this your third-party company?
Yes, this is called Accelerated Law. Yes.
Okay. Excellent. So the sponsor would go through Accelerated Law. They would create the OM/PPM as subscription agreements as they usually do. The investor would have the option to invest normally, so no change, or they could tokenize their shares. And now if they tokenize their shares, what happens then? Like, how does that process look to them? How does it look to the sponsor?
Looks to the sponsor exactly the same thing as it does now. So your shares, if you've got an investor, but with the blockchain, if everybody's on the blockchain, exactly what the pro ratas are. So like, let's say I'm in a Part 33 for 50,000 and two of your physician friends, one's in for 100,000, one's in for 200,000. The blockchain automatically keeps track of that capitalization table. It simplifies life for you. It also provides for the fact that you can do payments, whether you want on a quarterly basis, you can do payments on a monthly basis, on a yearly basis. Gives you a lot more flexibility as to how to make payments. There's a group out there out of Florida that actually does payments. I don't know how they do it, but they do payments daily. So
wow.
The technology allows that because it makes things more efficient.
Is this what you're offering here? Is this another CRM? Like, we use, for example, InvestNext. And it's kind of like Juniper Square, same type of technology where all of our investors put all their information in there, all of it's compiled, we distribute through that platform. Is what you're offering something like that, but it's through your Accelerated Law platform?
So that's a great question. And there's a lot of tokenization companies out there right now that try to replace InvestNext versus ours, where we just plug in. We're not a CRM. We're not any of that stuff. It's just that everything would now flow through InvestNext, because we also, being in the real estate business, know that it would be a tremendous inconvenience for you to have to move all your investors over to a new investor management software. So we try to be a plug-in to the investor management software.
Okay. So then when the investor decides to tokenize, how would their distributions be sent to them? Would it be sent to them through, it wouldn't be through the normal H that we send?
Well, so that's the nice thing, and we're talking about investor options again. So investors now get more options as to how they can be paid. So they can get the normal payment, but they can also get paid in the form of a stable coin, so that, let's say one of your doctors that is an investor with you decided to retire to Costa Rica. And so they could get their money in a stable coin. Their wallet would go with them, it'd be on their phone, and they wouldn't have to have a banking relationship in Costa Rica, because they would still receive all their stuff, only it'd be a stable coin.
And what is that exactly?
A stable coin is something, so there's USDC, there's USDT, there's a Euro stable coins. So it's basically similar to a money market where it's one-to-one value as a dollar. So you're getting paid as a dollar, but it's really a digital dollar.
Okay, so it's sort of like a Bitcoin.
You can get paid in a Bitcoin, but it's very similar. It runs on the same rails, but you're getting actual things that are convertible 1-to-1 to $1.
All right. So the investor can get paid normally through an ACH, or they could get paid through a stable coin, or whatever, Bitcoin or whatever. And
they can invest it through a debit card. They can invest through a credit card, all that stuff. So
invest what? Into the
investment, yes.
And would they have to invest the full amount? Because we have, for example, we have a $50,000 minimum that an investor would have to put in to be part of the deal. With this platform, can investors invest less than that, and they can be pieced together into one larger investment?
You could do that, but this is really all up to the sponsor. So if your $50,000 minimum is your $50,000 minimum, that's what your minimum is. But what you could do is make those shares less. So you could make the shares $10,000 a piece, which is what we did, or you can make them $5,000. And so that somebody can actually decide. So for example, if I invested $50,000, I could decide I wanted to trade $10,000 and hold $40,000. And so you could get other investors into your deals for less money, but you still get the efficiency of raising larger dollar amounts on the initial raise.
So if the investor has decided to tokenize their investment, and let's say after a year, they decide that they want to get out of the deal for whatever reasons, they have in need of liquidity at that time. Is it easier to do that than the normal LP route?
Well, I'm going to say theoretically it's easier because there right now aren't the secondary markets. There are places where you can list them, and there is the ability to trade them to accredited or non-accredited investors. So you've got a lot more options. So there is more liquidity, and we do what's called the Blockchain Real Estate Summit. So we're working with an ecosystem to try and create larger, marketplaces where these places can be listed and they can be traded.
Okay. All right. So that potential is there. It's not there currently, but
we're working with people, and we're developing things to not only create crowdfunding and ways to expand investor bases and bring new investors into alternative assets, but also create a situation where people can actually see things trading. They can say, hey, I want to get involved with, I like the cash flow part of this. I like the fact that there's appreciation, and I like the fact that I can get tax benefits, which I cannot get in the stock market.
Okay. And you also mentioned you can borrow against the shares. How does that work?
Once again, there's what they call protocols out there that if they get comfortable with the value of Park 33, then you could probably borrow. And right now, so there's and
what does that mean if they get comfortable with it? What does that mean exactly?
Well, they have to, because it's like any lender. They need to make sure that the collateral is what the collateral is. So with the group out of Florida, it's called Realty, and they actually have and they're not in any way comparable to what you're doing, because they have single family houses and in smaller buildings on the south side of Chicago and in Detroit. So it's nothing like the luxury that you guys are creating. And most of their investors are non-U.S. investors, so they're French investors. But those investors could take their shares and list them on this thing called Aave, and they can borrow against the shares because Aave is okay with the fact that there's actual asset behind it. It's an asset-backed token. So it's very similar to getting margin on your stocks in the stock market.
Oh, I see. Okay. I got it. So it sounds to me that the benefit to the investors are that there's more options. There's potentially more liquidity if they're able to sell their shares early. They can borrow against their shares through that Aave platform. The advantages to the sponsors are that basically they're giving their investors more options. More investors are likely to invest because the investors have those options. Is that in essence what's happening?
100%. And there's other organizations, companies, and protocols out there that are coming up now that are also going to be lending against asset-backed tokens. So because we're going to go back to crypto, because everybody says, well, what's the difference between this and crypto? It's like, these are legal securities. These are securities that are issued under the auspices of the SEC. And so there's a legal framework, and it's not like the Wild West of crypto. But one of the good things about it is that it gives you easier access and easier flexibility in and out.
Okay, excellent. And do you think this is the wave of the future? I mean, do you think all transactions are going to go in this direction?
I truly believe that, and JP Morgan believes it, BlackRock believes it, most of the large banks believe it, all Goldman Sachs and everybody believe it, and even the SEC and governments and regulatory authorities all over the world believe that, and they've outlined this framework for not only tokenized shares of companies, but tokenized shares of all kinds of other alternative assets that normally aren't available to investors. So, and that's why I'm so excited, because if you take a look at the stock market is big, but the largest assets out there is like trillions and trillions of dollars worth of real estate. And everybody knows that real estate has really been the wealth generator for thousands of years. And it's the fact that you can say that war was either over real estate or over religion. But most of the time, even when they throw the religion part in there, it's really about real estate. So everybody plays the real estate game.
Right. Okay. So really, either you get into it now and be at the forefront of this wave, or at some point you're going to have to catch up. I mean, that just seems like the way.
Well, you can, or you don't have to. I mean, but it's basically like there was a bunch of people that thought that a cell phone. So my first cell phone, we call it a car phone, because it took up most of the trunk in my car, and it was something, but that you didn't have to have it, but it created a lot of opportunities. And this is the same thing. It's like, this is going to improve people's lives. And my first computer cost like $4,500. And my kid probably in college probably had more computing power on his calculator than I had on that first computer. So it's going to improve life. It's going to make life more efficient. There's probably going to be some drawbacks to it, but overall, it's going to create, like I said, if you can create easier access to a lot of people, the value of your real estate is going to go up. Because if worldwide somebody says, I can get really good value in U.S. real estate, and we have the largest and the deepest marketplaces. So if I'm investing in one of your deals and potentially there's a liquidity pool out there, there's all these people that don't have sound money and are looking for a place to like create stable wealth. And also like, because Bitcoin, I'm a firm believer in Bitcoin, but Bitcoin doesn't pay you anything. But that's what I keep trying to tell all these Bitcoin bros. It's like, look, it's all great and it might be a store of wealth, but this is like an actual tested store of wealth for thousands of years, and you actually get paid something. It's not make believe I'm getting a return off of something that I really don't know where the return is. I know that, like, how many units are in our Park 33?
188.
Yeah, so I know that there's at least 180 to 188 tenants paying rent every month. And that's like the factual, that's true. You can back it up. I mean, and there's like a hard asset that was actually built. So there's intrinsic value to it. So right. If you're in Turkey where your money has not only halved, but gone down like by 80%, it's like, well, if I could get into something really stable, like real estate, and park my money there, this is going to create extra value for people that are already holders of U.S. real estate.
Now, you mentioned other countries. Is it easier for international investors to get into these types of deals if they are tokenized, or do they have to go through the same regulations as a normal syndication?
Well, they would come in through a Reg S investor, and there's extra complications involved with it, but it's going to make U.S. real estate more accessible to everybody throughout the world. And then the other thing with these type of investments is you, as the sponsor, has to do what's called know your customer and anti-money laundering checks. And there's certain restricted countries that won't be able to invest in this at all. And those are the countries that the U.S. and the Europeans and everybody else say, you can't do business with these people.
Got it. Okay, Michael. So if a listener wants to learn more about this type of investment, if a sponsor wants to learn how they can tokenize their investments, how can you give us some contact information? How can they reach out and find more information?
Sure. So they can contact me. We have a free report that they can get if they go to investonmain.com. That's investonmain.com. And we also are holding the Global Blockchain Real Estate Summit. This is our third year doing it. That's in September 26th through 28th. So if they go to blockchainrealestatesummit.com, and the really cool thing is that this is an international, it's an international movement. So we are going to have 3 days. 1 day is Europe, 1 day is the Americas, and 1 day is Asia. So we're covering everybody, and we're going to have people that have been doing this, experts, and all the rest of it. So if you're looking to learn, that would be a great place to learn. You're going to be able to see all the players in the industry. You're going to be able to see who's running secondary markets. You're going to see who's doing tokenization and all the rest of it. So,
well, thank you, Michael. This was very informative. Appreciate your time, and wish you the best of luck in what you're doing.
Thank you very much.
If you like this podcast, please hit subscribe or a thumbs up, and we'll see you next time.